In Cape Coral, Florida, Canadians now own over 100 single-family homes, and most locals have no idea. While headlines focus on Chinese buyers or hedge funds, Canada quietly became the #1 foreign investor in U.S. real estate in 2025, spending $56 billion, a 33% increase from the year before. If you're the kind of person who wants to understand why money moves before the market reacts, subscribe. Because what looks like snowbirds buying vacation homes is actually a calculated economic shift, and today we're breaking down exactly where it's happening. From waterfront Florida cities to border towns seeing cross-border commuter demand nobody's talking about yet. This isn't about wealthy retirees escaping winter. Canadians are buying U.S. real estate because their own housing market is frozen. Toronto saw its lowest transaction volume since 2000, down 51% from 2021. Meanwhile, U.S. towns offer better returns, lower taxes, and rental income in U.S. dollars. These aren't random decisions, they're responses. Today we're breaking down 12 U.S. towns where Canadian investors are quietly dominating the market, and by the end you'll see what these places are preparing for economically. Some offer lifestyle, others offer cash flow. A few are pure speculation plays tied to infrastructure no one's talking about yet. The patterns you're about to see will change how you look at real estate markets. In 2025, Canadians accounted for 61% of foreign buyers in Cape Coral, Florida, and Phoenix, Arizona, the two fastest-growing markets for international real estate. Florida remains the top destination, capturing 50% of all Canadian U.S. property purchases, followed by Arizona at 14%. The median home in Toronto costs $12,504 per square meter, more than double Los Angeles at $4,960. This channel exists to follow those price gaps and what they tell us about where capital flows next. When housing becomes unaffordable at home, money doesn't disappear, it relocates, and right now, it's relocating south. Number 12. Northport, Florida. Northport is one of Florida's fastest appreciating markets, and Canadians are buying before locals realize what's happening. Located between Sarasota and Fort Myers, Northport offers Gulf Coast access without Miami prices. It's quiet, growing, and still relatively unknown. Population is rapidly growing from retirees and remote workers. Cost of living sits below Florida's coastal average. Single-family homes dominate with median prices rising but still under $400,000. Canadians represent a significant share of foreign traffic to the area. The main incentive is proximity to beaches and airports without premium pricing. Here's the unexpected detail. Projected 8% price decline in 2026, creating a buyer's market. If you wanted Florida sun without the crowds and your dollar went further than it does back home, this is where you'd look. Northport represents the next wave. Canadians moving beyond saturated markets into towns most Americans haven't prioritized yet. Picture a sleepy subdivision 20 minutes from the Gulf, where for sale signs increasingly list agents with Toronto and Vancouver phone numbers. Could you live in a town most people skip over on the way to somewhere else? Number 11. Chandler, Arizona. Chandler is Phoenix's quieter tech suburb, and Canadian investors love the rental yields. Southeast of Phoenix, Chandler blends desert lifestyle with a booming job market driven by Intel, Northrop Grumman, and tech startups. Population is growing from tech sector expansion. Cost of living is lower than California with no state income tax. Housing includes condos, patio homes, single-level houses in the $400,000 to $800,000 sweet spot. Jobs from tech and defense contractors drive demand. Canadian presence makes it a top choice for Phoenix area investment. The unexpected detail, direct flights from Calgary, Vancouver, and Toronto make management easier. You're not competing with hedge funds here, you're competing with retirees from Alberta who want warmth and cash flow. Chandler shows how Canadians follow job markets, not just lifestyle. Where tech grows, rental demand follows. Picture subdivisions of low-maintenance desert homes, each generating $2,000 plus monthly rent to cover snowbird expenses. This is the investment that pays for itself while you use it 3 months a year. The math is simple. Buy where engineers are moving, rent to the ones who got there first, and let tech sector growth handle your appreciation. Would you buy where the tech workers are moving or where they've already moved? Number 10. Scottsdale, Arizona. Scottsdale isn't cheap, But Canadians still see value compared to Vancouver. Known for golf resorts, spas, and desert luxury, Scottsdale attracts higher net worth Canadian buyers looking for lifestyle and appreciation. Population is stable and affluent with seasonal spikes. Cost of living is high for Arizona, but still below comparable California markets. Luxury condos and single-family homes dominate with strong resale markets. Canadian presence is popular among retirees and second-home buyers. Main incentive is golf, hiking, national parks, a nature-focused lifestyle. Here's what most people miss. Lower property taxes than Florida offset higher purchase prices. If you've spent $1.5 million on a Vancouver condo, a Scottsdale golf course home for $800,000 feels like a bargain. Scottsdale proves that Canadians aren't just chasing affordability, they're chasing relative value. You're not looking for cheap, you're looking for better value per dollar spent. Picture open-plan desert homes with mountain views, infinity pools, and property tax bills that would make a Toronto homeowner weep with envy. This is where Canadians trade urban density for desert space and still come out ahead financially. The lifestyle upgrade pays for itself in tax savings alone. Could you justify luxury in a market that's still cheaper than home? Number 9. Orlando, Florida. Orlando isn't just Disney, it's one of the strongest vacation rental markets in North America. Central Florida's tourism capital offers year-round rental demand from theme park visitors, making it a cash flow machine for foreign investors. Population is growing from tourism and remote work migration. Cost of living is moderate for Florida. Short-term rental properties dominate Canadian portfolios. Jobs come from tourism, hospitality, and the convention industry. Canadian presence makes it a top 5 destination for investment. The detail nobody mentions: projected 1% price decline in 2026, creating entry opportunities. You're not buying a home, you're buying a business that happens to sit near Magic Kingdom. Orlando represents pure rental arbitrage: buy in Canadian dollars, rent in US dollars, profit from tourism that never stops. Picture a townhome 15 minutes from Universal, booked 300 nights a year on Airbnb, managed remotely from Montreal. The numbers work because tourists keep coming regardless of economic cycles. Families will cut back on restaurants before they cancel Disney trips. That makes Orlando recession-resistant in ways other markets aren't. Your property becomes a small business with theme park foot traffic as your customer base. Would you invest where tourists go, even if you'd never lived there yourself? Number 8. Tampa, Florida. Tampa combines Florida lifestyle with an economy that doesn't rely solely on tourism. On Florida's Gulf Coast, Tampa offers beaches, a growing tech sector, and year-round livability, not just seasonal appeal. Population shows strong growth from domestic and international migration. Cost of living is rising but still below Miami. Housing mixes single-family homes and waterfront condos. Jobs span finance, healthcare, tech, and logistics. Canadian presence maintains steady investment from buyers seeking diversification. Here's the unexpected angle: projected 6% price decline in 2026 due to oversupply. If you wanted Florida without the pure vacation gamble, Tampa is where you'd look. Rental demand exists even when tourists stay home. Tampa shows how Canadians balance lifestyle and economic resilience. It's not just about sun, it's about sustainable rental income. Picture a condo near Ybor City, rented to healthcare workers relocating from the Midwest, generating income 12 months a year. This is the hedge against seasonal risk. When vacation rentals go empty, long-term tenants keep paying. Tampa offers the Florida lifestyle with Midwest economic stability. You get beaches and job growth in the same market. That combination is rarer than most investors realize. Could you invest in a place that offers both tourism upside and job market stability? Number 7. North Phoenix, Arizona. North Phoenix offers suburban affordability in one of America's fastest-growing metro areas. North Phoenix neighborhoods like Desert Ridge and Anthem attract families and retirees, creating consistent rental demand. Population shows explosive growth from California and Midwest migration. Cost of living is lower than coastal markets with no state income tax. Single-family homes, townhouses, and condos fill the $400,000 to $700,000 range. Jobs include suburban offices, healthcare, retail, and education. Canadian presence dominates. 61% of international traffic to Phoenix is Canadian. The game changer, direct flights from major Canadian cities make property management feasible. You're buying in the path of growth, where Phoenix is expanding, not where it already is. North Phoenix shows how Canadians follow migration patterns, buying where Americans are moving to. Picture master-planned communities with parks, golf courses, and HOA fees lower than Toronto condo maintenance costs. This is suburban America at scale, communities built in the last 20 years that already feel established. The infrastructure is new, the schools are good, and the homes are designed for modern living. You're not buying history, you're buying function. And for investors, function rents better than charm. Would you invest in a suburb that didn't exist 20 years ago but now defines the metro's growth? If you're starting to see why these specific towns matter, you're thinking like an investor, not a tourist. The next 5 locations show where the real money is moving. Stay with me. This gets deeper. Number 6, Miami, Florida. Miami is expensive, but still cheaper per square meter than Toronto. South Florida's international hub offers luxury, culture, and one of North America's strongest rental markets. Population is growing from Latin American and domestic migration. Cost of living is high but offset by no state income tax. Condos dominate at median $5,150 per square meter versus Toronto's $12,504. Jobs span finance, tech, healthcare, tourism, and international trade. Canadian presence represents a long-established market with high resale liquidity. Here's what separates Miami. Projected 1.1% price increase in 2026 while other Florida markets decline. If you've watched Toronto condo prices double, Miami's waterfront suddenly looks like a relative bargain even at luxury prices. Miami proves Canadians aren't avoiding high prices, they're avoiding overpriced markets relative to income potential. Picture Brickell condos with ocean views, rented to finance professionals, generating US dollar income that outpaces Canadian dollar mortgage costs. This is where currency arbitrage meets luxury real estate. You're not just buying property, you're buying a currency hedge that appreciates. Miami stays expensive because it works. International capital keeps flowing in because the fundamentals justify the premium. Could you invest in a luxury market if the numbers still worked better than home? Number 5, Phoenix Central. Arizona Phoenix Metro is the epicenter of Canadian investment in the Southwest. Arizona's capital offers year-round sun, affordable housing by coastal standards, and a booming economy driven by tech and logistics. Population makes it the fastest-growing large metro in the U.S. Cost of living includes no state income tax and lower property taxes than Florida. Housing offers diverse options from downtown condos to suburban estates. Jobs grow through tech hub expansion, with Intel, Amazon, and startups. Canadian presence dominates at 61% of international buyers. The critical detail, strong rental potential with yields outperforming California. You're buying where California tech workers are relocating and paying Arizona prices while they're still catching up. Phoenix represents the intersection of affordability, growth, and accessibility, the perfect recipe for cross-border investment. Picture downtown lofts near ASU, rented to remote workers and grad students, managed from Calgary via property management apps. Phoenix isn't just growing, it's transforming. The city that was once a retirement destination is now a tech hub with Fortune 500 headquarters. That shift creates investment opportunities most people miss because they're still thinking of Phoenix as it was, not as it's becoming. The investors winning here saw the transition early. Would you invest in the desert if the numbers pointed there even if you'd never choose it yourself? Number 4, Detroit, Michigan. Detroit is the sleeper market almost no one talks about until they see the returns. Motor City offers the lowest entry costs in the U.S., explosive cash flow potential, and infrastructure investments that are just beginning. Population shows revitalization underway with young professionals returning. Cost of living hits rock bottom with average home price $65,187. Housing showed 8.7% price growth in 2023, outpacing Miami. Jobs span automotive, tech, and healthcare across the border. Canadian presence puts Michigan 5th for investment with Detroit leading growth. Here's the catalyst nobody's pricing in yet. New Gordie Howe Bridge, opening in 2025, connects Detroit-Windsor, fueling cross-border investment. For the price of a parking spot in Toronto, you can buy a renovated home generating $100,000 annual cash flow. Detroit shows how infrastructure drives investment before the general market notices. The bridge isn't just transportation, it's economic integration. Picture Windsor residents commuting daily to Detroit for US dollar salaries, then buying Motor City rental properties for Canadian dollar pennies on the dollar. This is what opportunity looks like when everyone else is still scared. Detroit's reputation lags its reality by about 10 years. The city that collapsed is rebuilding, and early investors are capturing generational returns. Could you invest in a city most people wrote off if the data told a different story? If you're still watching, you're already seeing patterns most people miss. Canadians aren't just buying vacation homes, they're buying rental income, tax arbitrage, and currency hedges. The top three make those patterns impossible to ignore. If this is changing how you see markets, hit that like button right now. Number 3. Cape Coral, Florida. Cape Coral isn't just popular with Canadians, they dominate the market. Known as the Venice of America, Cape Coral features over 400 miles of canals, waterfront living, and a lifestyle built for boating. Canadians own 1,100 single-family homes here and account for 61.4% of all foreign buyers. Population exceeds 240,000 with steady growth from retirees and investors. Cost of living stays lower than Miami or Fort Lauderdale. Housing emphasizes single-family homes with open floor plans, large yards, and outdoor kitchens averaging $941,000. Jobs center on tourism, service economy, and cross-border remote work. Canadian presence totals 1 to 100 properties owned by nationals. The market indicator, Gulf Access Home Sales, nearly doubled in October 2025 compared to 2024. Cape Coral was developed in the 1950s as a planned waterfront community, but didn't attract serious Canadian attention until the 2000s. The combination of affordability, canal access, and proximity to Southwest Florida airports made it a natural fit. Canadians choose Cape Coral for lifestyle and economics, waterfront access without Miami premiums, strong rental demand during snowbird season, and property taxes lower than comparable Ontario costs. Could you build a retirement plan around a town most Americans have never heard of? Number 2. Windsor, Ontario. Reverse flow. Wait, Windsor is in Canada, but U.S. investors are buying here because of Detroit. Windsor sits directly across the river from Detroit, connected by the busiest international trade corridor in North America. With the Gordie Howe International Bridge opening in 2025, Windsor is becoming a cross-border investment hub. Population remains stable with growth from cross-border professionals. Cost of living shows average home price $487,000 Canadian or $358,500 US. Housing offers higher quality to price ratio than comparable Detroit suburbs. Jobs support 6,000 Windsor residents who commute daily to Detroit for US dollar salaries. U.S. investor presence grows from Detroit area buyers seeking affordability. The opportunity, East Riverside waterfront properties cost 30 to 40% less than comparable U.S. waterfront. The Detroit-Windsor corridor has always been economically integrated with $400 million in daily trade, crossing the Ambassador Bridge. But the Gordie Howe Bridge changes everything. It doubles access lanes and connects directly to Interstate 75, making cross-border commuting seamless. U.S. investors see Windsor as quality arbitrage, better-built homes, lower entry costs, and rental income from high-earning Detroit commuters. Windsor proves cross-border investment flows both ways when infrastructure and economics align. Could you invest where two currencies and two labor markets create opportunities neither side sees alone? Number 1. Phoenix-Scottsdale Metro. Combined, Arizona-Phoenix isn't just the top Canadian investment market in the U.S., it's reshaping how cross-border real estate works. The Phoenix Metro, including Scottsdale, Chandler, Tempe, and suburbs, is the second largest destination for Canadian investment after Florida. Canadians account for 61% of international traffic, and the Metro offers everything from luxury golf estates to suburban rental properties. Population makes it one of America's fastest-growing metros, with migration from California and the Midwest. Cost of living includes no state income tax and lower property taxes than Florida. Housing diversifies from condos at $400,000 to luxury estates over $2 million with strong appreciation and rental yields. Jobs expand through tech hub growth with Intel, Amazon, and startups, plus healthcare, logistics, and finance. Canadian presence dominates the international market with direct flights from Calgary, Vancouver, and Toronto. The advantage: Phoenix offers higher rental yields than California with lower risk. Phoenix transformed from desert outpost to North American tech hub starting in the 1990s, but Canadian investment surged after 2008 when snowbirds discovered discounted vacation homes during the housing crash. What started as lifestyle purchases evolved into sophisticated rental portfolios as Phoenix's economy diversified beyond tourism. Phoenix represents the future of North American migration economics. As California becomes unaffordable and climate makes Sunbelt winters more appealing, Phoenix absorbs both domestic and international capital. Whether Canadian investors are buying waterfront in Cape Coral, desert homes in Phoenix, or revitalized properties in Detroit, they're all responding to the same pressure. Canada's housing market became too expensive to generate returns. The U.S. offers better cash flow, lower taxes, and rental income in a stronger currency. These 12 towns aren't just popular destinations, they're signals of where economic systems are changing faster than local governments can adapt. If this helped you see these markets differently, not as random towns, but as pieces of a larger cross-border economic shift, subscribe. Every week we break down the places, policies, and patterns most people won't think about until they're already feeling the impact. Because understanding where money moves tells you why economies change, and that's what this channel is for. Hit that subscribe button, turn on notifications, and I'll see you in the next one.